Alrighty, well, we do have a few people joining on at this time. So I do want to say good morning and welcome to today's webinar, Rev Up Your Listings in Reverse. Before getting started, I wanted to share some great upcoming webinars that you might not want to miss. To learn more about forbearance updates and credit consequences, join us on July 7th at 5 p.m. to hear the latest updates and available resources from Freddie Mac. Also note this webinar is open to all homeowners, so be sure to share this information on Facebook with family and friends. And while you're there, be sure to like us. Okay, now this information is for NSDCAR members. Are you aware of your newest member benefit, Rent Spree? Learn how screening a tenant is made easy and also learn how to streamline the process while reducing your liability. Join us on July 6th and learn all the benefits Rent Spree offers. You can register for both of these webinars and all future webinars at www.nsdcar.com/webinars. And now our presenter for today's webinar, Robert Ross.
Hello, how's everybody doing this morning? We got Crystal Moe here as well. She's going to be aiding in today's live stream. So today's live stream, Crystal, you want to go over what we're going to do towards the end and all that stuff?
Yeah, of course. So again, hi, welcome everyone. Good morning. My name is Crystal, and I'm with Robert Ross with Reverse Mortgage Educators. So today's 30-minute webinar is going to be all about how you can rev up your listings in reverse with the reverse mortgage for purchase. Just a couple of housekeeping items before we begin. So a few of you, I believe a good portion of you guys should have just received a copy of this PowerPoint. You can find it in your email, and you can print it out, you can follow it along. It's just only going to be half an hour. Second thing is that we will be taking questions today, and since this is a 30-minute webinar, please feel free to drop in any questions that you guys have in the chat, and it should be defaulted to all panelists, so we'll be able to see everyone's chat questions, and then at the end of the 30 minutes, we'll answer all of the questions at once. So please feel free to ask questions today. We definitely encourage it. And then finally, we are doing a $20 Amazon giveaway for NSDCAR members as a thank you for attending our webinar right here. So in order to register, in order to basically get on this giveaway, we want you guys to, if you can, just put in your first name. Just first name is fine, and then please put in an email so we can contact you afterwards if you are the winner. And first name and email is all we need, and you'll be able to enter the giveaway. And please rest assured that the chat defaults to all panelists, so your information will be private. So this information will not be something that everyone will be seeing. So $20 Amazon gift card giveaway at the end of the presentation. With that being said, Robert, I think let's just go ahead and get started right now.
Okay, let's go ahead and cover today's topics. So what we're going to be talking about today is basically a general and basic understanding of a reverse mortgage. I want to give you guys some information that will help you when your customers, your retired homeowners, ask you about this product, whether it's a refinance reverse mortgage or a reverse mortgage for purchase. So both are the same products. One's used to stay in your home, to live in that home, access equity, and eliminate your monthly mortgage payment. The other product is used to buy a home. In other words, you're putting a down payment or funding a loan, and then when you close escrow, you have no mortgage payments going forward on that particular home that you purchased. So we'll cover that today. I want to give you guys just enough information so that way you can answer a question from a potential client intelligently and give them some information that's good for them to understand. We're going to talk about how a reverse mortgage for purchase works, and of course, how that's going to affect your business, right? We want to share with you today that there are plenty of people out there that are retired, that are living in homes, that are interested of selling their property and buying something that's more suitable for their retirement needs. And we're going to show you how that is. One of the things we're going to be doing today is that after this class is done, it's a brief class. I certainly can't get into all the ins and outs of the product and how this can affect your business. So you're going to get access to a video series that's going to go more into depth of this product and how it can benefit your business. So we'll talk about that towards the end of the class, but I just want to give you guys a nice holistic view of the product. After today's class as well, you'll be getting some complimentary marketing materials that you can have in front of your consumers that may want to list and downsize or right size for that matter. So we're definitely going to talk about that. Let's get into the basics of a reverse mortgage. Okay, so I'll just read the bullet and I'll go into a little more detail. A reverse mortgage is an FHA loan with optional monthly mortgage payments. That's probably not registering in your mind correctly. You're probably thinking, well, reverse mortgages don't have monthly mortgage payments. I don't understand what that means. So let me give you kind of an idea of how this product works once you have it. So just like a regular mortgage, you get a monthly mortgage statement when you have a reverse, right? So let's say you borrowed $200,000 on a reverse mortgage, and maybe your house is worth $600,000, okay? And maybe you qualified for $300,000. So you got a $600,000 value, you qualified for $3, but you only owe $2 on your current mortgage, okay? So the reverse mortgage comes into play. It pays off what you owe, and you're going to have some leftover cash that you can access throughout your retirement. But here's how the loan is a reverse. So the very first month, you're going to get a monthly mortgage statement. That statement is going to tell you a couple of things. It's going to show you what your balance is. It's going to show you what the interest and mortgage insurance costs are for that particular month. It will also show you the available proceeds you have in case you want to borrow more money against it. If you do nothing with that mortgage statement and simply just fold it up and file it away in your file cabinet, the interest and mortgage insurance that's due for that particular month is going to defer toward the balance. And that's how the balance will grow. In other words, it's reversing, it's going the other way, right? Well, I'm here to tell you that some customers are starting to make payments on these things. And the reason being is because they're trying to control how the loan performs over their lifetime. And it's an interesting strategy because once you phrase the loan in that manner to somebody, you're like, hey, you can get this loan. It's got optional monthly mortgage payments. You control how the loan works throughout your life. It definitely puts a different feeling on the product. And these are the rules of how the loan can work. So in all reality, let's say you didn't make that payment, right? Let's say those that interest and mortgage insurance costs for that month are $1,000 on that $200,000 balance. And you do nothing. Well, what happens is the next month you're going to owe $202,000, and it will continue to defer interest throughout your life, assuming that you never contribute to it. Now, I would say 90% of the borrowers out there that have reverse mortgages don't make payments on these things because they're trying to preserve all their Social Security income for other needs, right? So, but the point I'm trying to drive home here is that it's optional, and you have control over these loans. So when you get a customer who asks about a reverse mortgage, you can simply put, look, it's a loan that has deferred interest, and you choose when and how you want to pay it if you ever want to. The best part is if you don't, you get to live in the house for the rest of your life. No one's going to come foreclosing on you. It's simply just the loan accumulates over your lifetime. And then down the road, when either you pass away or sell the property, the loan gets paid off and everybody moves on at that point. And the equity that's left in the home will go to the heirs, assuming that you have it set up that way. So that is the basic holistic view of a reverse. Let's talk about if a client never makes a payment, right? Which I said 90% of the people out there don't make payments because they're trying to keep as much as their Social Security income in their possession as possible. But the way the loan works, because it's FHA insured, in other words, nobody's really concerned about what the balance is doing at that point in time. The balance is simply deferring interest over your life. You get to live in the house for the rest of your life, no matter what, and assuming that you're fulfilling the rules, which we'll cover in a little bit. But the point is that you get to live in the house for the rest of your life, never make a mortgage payment, and all that happens is simply the balance will grow over your lifetime. So it's pretty powerful stuff because right now, I would say a large portion of our retired homeowners are living on Social Security alone, and that average Social Security check is about $1,461 per month, which means that by the time you pay your mortgage, your taxes, your insurance, some maintenance on the house, and your normal cost of living, you're left with nothing. So that's where the reverse really gets its legs is because, first of all, you can qualify for the thing, and then second, when you get it, there's no monthly mortgage payments going forward. So that's a great tactic. So in 2009, so you got to think about this. So the reverse mortgage came into the marketplace back in the late 80s, and it's been pretty much the same as it's been since then. So there's been changes with loan amounts and how we underwrite and things like that. But the reverse purchase was not around in the very beginning stages of this product. In fact, it didn't come out until 2009. So what that means is every time, I've been in the business for 15 years, and there was no reverse purchase product when I got into the industry. So that means every time that I did a reverse mortgage on a homeowner who may have been struggling in retirement in their house making a mortgage payment, I would do a reverse, and there goes a listing for a realtor, because normally a person might opt in to list their home and buy something all cash the next time around to eliminate that monthly mortgage payment. But all of a sudden, here comes the reverse guy and does a reverse mortgage. So was I helping the real estate community at that point in time? Probably not. But fast forward to 2009, the reverse purchase product gets rolled out, which is fantastic, because now a consumer has the choice of either staying in place and doing a reverse, or selling their home and moving on to a different home and using a reverse to buy that home, which is a great strategy. So that was a great time. And in 2009, I probably did one reverse mortgage for purchase. You fast forward to today, about half of my pipeline is reverse mortgage for purchase. So the trends are going toward that section now. There was a National Association of Realtors study that was done about a year and a half ago, I believe. And what they did was, over a 12-month period, they sent out surveys to homeowners who had sold their home, their primary, and repurchased a replacement home. And it had all kinds of questions on that survey. But what was interesting about that survey was that 54% of all the homes that were sold and they bought a replacement home were the ages of 55 and older. So that tells you right there that there's a lot of retired homeowners starting to make those decisions about what they want to do with their next real estate transaction, whether they want to do a reverse and stay in place or sell. Now that brings me to my next point. The reason why people are doing these loans is because they can qualify for it. So you get somebody who had sold their house, and now they have a certain amount of equity to work with to go to buy that replacement home. In some cases, they may need a loan to get to the purchase price they're looking at. And unfortunately, when you're living on Social Security alone, and maybe you got some shaky credit, you're not going to qualify for your standard 30-year fixed mortgage or anything like that. So the fact that people can qualify for this loan with a little shaky credit and some low income is phenomenal. And that's where the loan really gets its legs. So, I mean, even if someone's got, a 550 FICO score, we're not too concerned about the credit score. What we are concerned with is, how did you get the score, and what was your credit history like in the last couple of years? If there's some issues, like there's a mortgage payment late 6 months ago, 9 times out of 10, a homeowner, especially a retired homeowner, has some sort of hardship that made that happen. And as long as they can document it and give some supporting documentation, we can certainly overcome those issues. So the fact that people can get this on a low income with a little less than perfect credit is great. Now, this is an interesting bullet here. So what we're starting to see with the clients that we're working with that have been referred to by real estate agents to us is that initially, when the real estate agent had met the customer, they had no intentions of really selling their home. In other words, maybe they were interested in a reverse mortgage. Maybe they were just interested in looking at different options or possibly selling, right? Well, what we're seeing is that I may come across a customer who wants to do a reverse mortgage and stay in their house for the rest of their life. And I would say about 50% of the time, they don't qualify to stay in their home. And the reason being is because there's been a lot of changes in our industry over the last several years. More recently, back in 2017, HUD reduced our loan amounts. So if somebody calls me up and says, hey, I got a house that's worth $700,000 and I owe $400 and I'm 65 years old, they're not going to qualify because I can't give them a big enough loan to pay off their existing mortgage to stay in that particular home. So that's when the conversation changes with that homeowner. I might say something like this: unfortunately, you don't qualify in this particular home due to age and your mortgage balance and the value. So you have other options, and here's one of them. Your option would be to list your home with a real estate agent, get the net equity out, right? So let's say that customer is netting $400,000 or $300,000 or whatever the number may be, right? That's where they might want to take that net proceeds and use it as a down payment on a little bit lower valued home. Instead of owning a $700,000 house, maybe buy a $650,000. And those numbers may work on that based on their age and that purchase price. So they put down their net proceeds from the house they just sold. We do the reverse purchase on that property as a loan on that house. And now they've gotten their goal, which is owning a piece of real estate, primary residence with no monthly mortgage payments. So that's what I'm meaning by people with have no intentions of really wanting to sell their property, may have to due to their financial situation, but they need to know that there is a possible way they can still obtain financing without having a monthly mortgage payment or optional monthly mortgage payments, as we put it in the first bullet. So we're seeing more and more of these transactions, and we're not going to go too much into this today, but in that webinar series that we have pre-recorded for you that we're going to give you guys access to, you guys can have these videos at your own pace. You can get them as a lump sum, a weekly basis, however you wish to receive that content. It's going to talk about what's going on with our retired homeowners and why they're looking at doing the things they're doing in retirement, whether they're doing reverses, selling and repurchasing something that's downsized. So that this whole recorded series that we have that we're going to share with you guys later in the class here will cover all this stuff in detail. So that way you guys have an understanding of what's going on with our particular demographic. But make no mistake about it, they are making decisions with their real estate and their finances right now. What the whole point is to put you guys in the driver's seat to realize that customer when it happens, okay? Let's talk briefly about refinance, because you will get the questions out there. So a refinance reverse mortgage is simply a loan that goes on the house they're living in. In most cases, it's paying off the regular mortgage they have, eliminating their monthly mortgage payment. And then in addition to that, sometimes they qualify for extra proceeds. Those proceeds can be received in a couple different formats. They can receive it in a monthly payment to them, both 10-year and term. 10 years forever, which is a predetermined amount based on their life expectancy. Term is something they would say, hey, I want a certain amount and I want it for a certain duration of time. So they can receive payments. You guys have probably heard of that. How does a person get a reverse mortgage payment sent to them? Well, that's how they would do it. Any proceeds they qualify above and beyond their mortgage payoffs on their current house, they can opt in to have those sent to them in chunks of money every single month. Another option is they can do what's called a lump sum of cash. And then, of course, the other option is they can do a line of credit for the extra proceeds they qualify for. The line of credit's interesting because if you're not borrowing the money, it's not part of your balance, and you don't get charged interest for it, which is great, which ultimately preserves equity. In fact, while it's sitting there, they have a growth rate, so they'll unlock more equity for you as the years go by. And again, the slideshows that we're going to give you guys, or the video series we give you guys after this, will cover all this in detail. So I'm not going to go too much into detail on it, but just know there are different ways to receive that money out of that property. So that's in a refinance, but I want to really dig in a little more further on the purchase product, which we'll do it in just a few moments here. Here we go. So let's talk about our first example, okay? This is probably your most typical downsizing reverse mortgage for purchase example. So here we go. So let's say you found a customer and you listed their house for $850,000, and the person that's listing this house is probably listing for a couple of reasons. One, the house is too big. Maybe it's two-story. Maybe it's just too much to maintain for them anymore. Or the lot size is too big. In other words, they have a pool or a lot that's really large. They have gardeners. It's hard to maintain. It's an extra expense in retirement that you really don't need, okay? So that could be one reason. Or maybe maybe they're tired of making that monthly mortgage payment. In this particular transaction here that we're going to show you this example, let's assume that they have a mortgage payment they're tired of making that's eating up all their Social Security income. And on top of that, the house just isn't really fitting their needs in today's today's age. They're 75, 72, 73 years old. Just not going to cut the mustard in this situation. They're looking for a better situation. So you list the house for $850, and let's say after the mortgage payoff and all the cost with selling that real estate, the customer nets $400,000 in net proceeds. Okay. Now it's your job to either A, find them a house all cash at $400,000, or they get some sort of financing to increase their purchase power, right? The problem there is that they're leaving a house with a mortgage payment. They certainly don't want to take on another property with a mortgage payment because they're on Social Security. So they love the idea of having a reverse mortgage as their choice of financing to buy the next home because it has optional mortgage payments. So let's say they after they sell their house for $850, you locate them as a replacement home for $600,000. And based on their age of 73, of the $400 they netted from the $850 home, we say, look, you're 73, why don't you put down the minimum of $270 on the house of $600, and I'm going to fund the difference of $330 on a reverse mortgage for purchase. So there you go. What I like about this transaction right now is that first, they didn't use all their proceeds as the down payment. So they didn't wrap up all their net proceeds in equity or in the home, right? So you're going from a house that they own for $850 with a mortgage payment and nothing in savings and having a fairly large payment, right? All of a sudden, they got themselves a $600,000 home, and they have $130,000 left over from the previous house, and they didn't generate a monthly mortgage payment. In fact, they're optional. So now you can really start to see here, this customer is starting to get into a more comfortable situation when it comes to retirement. They're living in a nice house at $600,000. Yeah, it's not their big $850 home, but maybe it's a nice $600,000 home that was just remodeled from an investor or something like that. They got no mortgage payments and they got 130 grand in the bank. That's super powerful in retirement. These transactions, in addition to obviously, they're probably pretty lucrative if you're able to get both the listing and the buying opportunity, but more importantly, the outcome is what is most important, at least for me. These customers that do this, you got to understand how much stress is relieved off of them after getting rid of that mortgage payment, getting rid of that bigger home, and getting into something that's more manageable. And the fulfillment aspect for me and for you guys when you put this transaction together for a customer is probably one of the best things you can do. It feels good, it feels right, it really helps the customers out, and they can really retire and start to live a little stress-free. I mean, at the end of the day, they're in retirement, they've worked hard their whole lives, they deserve to not be stressed out in their golden years, that is for sure. So any way I can help out in that, I definitely would love to do that. So very powerful stuff. And again, we talked about, I don't necessarily care if they got a 550 FICO score. I just want to know how the last 2 years were really going in terms of credit. So, if they, like I said, if they have a mortgage payment or a tax installment that was missed, 9 times out of 10, the consumer has a valid reason why they missed it. It could be anything. It could have been, I had to take care of my auto repair job. I had to give some family members some cash. I had a house expense, a medical expense. Any hardship when you're in retirement or any unexpected expense will throw you behind the 8 ball, which make things late in a ripple effect. So usually we can find and identify that issue and overcome it with a simple letter of explanation and some supporting documentation, and we get over those issues in underwriting. Again, the fact that they can qualify this loan based on their Social Security income is powerful. And then the payments, of course, are optional, which is great. All right, let's talk about, what's our time right now, Crystal?
Oh, we're looking at about 5 minutes left.
All right, let's wrap it up right here. So what we have here, I'm going to throw all these bullets up real quick here. This is the video series I was talking about that you can leverage. So you guys will get emails, I believe, after this. Crystal, you want to explain how this all comes out to them?
Yeah, for sure. So you guys just took, a half an hour webinar right now. This class is usually 3 hours long. So there is a lot of information that we're not covering. What we cover right now is really just, really the basics, but there's so much that, we talk about, like, for example, what happens in the future with a reverse mortgage? What happens with the heirs? What are some of the reverse mortgage common misconceptions, and what are the obligations? How do you calculate a client's down payment, and what happens before you write an offer? So these are all topics that we cover in these video series here, and this is complimentary. Just throwing that out there. You don't have to pay a single cent with us for anything that we give you guys. So these videos will be these are 6 videos, and they are the class separated in about 5 to 10 minute chunks. So if you want to learn again about how the reverse mortgage purchase works, you watch video number 2 right there. Again, this is all complimentary, and for everyone who has attended our live stream today, we want to send these videos to you. So in lieu with the Amazon gift card giveaway that if you would like to attend, if you want to be completely sure that you get this video series to learn all the rest of the information, please go ahead and just drop your email in the chat here, so then we can get you guys these videos, because yes, they are coming to your emails. And as a further incentive, what happens afterwards, so you watch the video series, great. You get a optional quiz that you can take. So this optional quiz, it's just 10 questions. It's very simple. If you went through the video series, you'll definitely pass. But the incentive there is that after you take the quiz and pass, we're going to be sending you a complimentary starter marketing kit. So completely complimentary. This kit will contain a reverse mortgage packet. It'll be with a DVD in it. There will be a bunch of booklets. There will be a bunch of door hangers, all on us, and you'll be able to just go ahead and give those out to some of the people that you may know that could possibly use this information. And on top of that, we actually have a software called Go Cordon that you get access to. We've designed it ourselves. And with Go Cordon, you guys can, for somebody in your sphere that you know could possibly use this information, we'll automatically send out newsletters and marketing materials to them with your name on it at no cost to you. So that's also something else we offer after you complete the video series. And on top of that, in our website, you can download our customizable professional marketing materials like postcards, more door hangers, more flyers. You can even download our newsletters. And we have tutorials on software like Title Pro 24/7 and Remind to show you how you can use that software to look for those older homeowners in your farm that need this information. So these are all the resources that after, again, I'm seeing a couple emails pop by, that's good. And I'll also go ahead and enter everyone here who's given me their email into the Amazon giveaway right now. So now it's 10:29. While I do that, Robert, we have a couple of questions here.
Sure.
That would you like to answer?
Yeah, let's do it.
So first, Elizabeth had asked, is there a minimum equity required for qualifying for the reverse mortgage for purchase?
Well, so the down payment is where is the factor you need to look at. So we actually have an app that'll do this for you on your smartphone. If you guys want to download that, you just search REV, R-E-V, the number 4, P-U-R. Crystal, you want to throw that in the chat, that'd be great.
Okay.
But to answer the question, every single age, so from the age of 62, which is the entry-level age to get a reverse mortgage for purchase or a regular reverse, 62, 63, 64, all the way up to 95 is a different loan-to-value calculation. So the younger you are, the higher the down payment. The older you are, the younger the down payment. That means that we're giving you a smaller loan amount when you're younger and a higher loan amount when you're older, because there's less time during life expectancy if you're 95 versus 62 to accrue interest over your lifetime. So FHA adjusts their loan amounts according to life expectancy. So the down payment's going to vary based on age, purchase price, and interest rates, of course. So if you use the app, it'll get you in the ballpark. But like, I'll give you just a quick rundown. 62-year-old's probably going to put down about 50%, and we're going to finance the other 50%. So then 95 is going to be probably 25% down, and everything else in between. So it's impossible to remember. That's why we made the app for you guys to be able to use on your phone.
Okay, great. And then let's see here. Let's see, we had a few more questions. Okay, Ryan had asked, can you do the reverse mortgage for purchase and use the one-time tax transfer base?
Yeah, so you're referring to Prop 60, Prop 90. Those are completely independent from the reverse. So yes, you can definitely leverage your 60, 90 exemption or property tax base bring over. It's just going to depend on the county at that point in time. So nothing to do with the reverse. Your normal 60, 90 transactions will definitely work.
Okay, great. And then Sandy had asked, is there a limit to the number of times a client can sell and reinvest in a primary residence with a reverse mortgage, or a minimum time period between the sales?
No, you can only have one reverse mortgage at once. I do know that. So I'll give you an example. You get a reverse mortgage, you buy a house today with it, and then like a year and a half later, you decide to sell and move to a different state or something like that. You'd simply sell it, pay off the reverse, and then you can do another reverse on the house you're buying over there. You just can't have two at the same time.
Okay, great. I think that's all the questions. If I missed one of your guys' questions, because I just got a lot of emails, please feel free to re-put it in the chat. Otherwise, I'm just finishing up right here on the giveaway. Last call for anyone who want to put their emails for both the video series and the $20 Amazon gift card giveaway. So while I'm finishing up here, Rob, do you have any closing statements that you want to address?
Yeah, I mean, so definitely go through that video series, get the complimentary marketing kit so you guys can start, attracting these older homeowners to list their homes. That's the goal, you guys. My goal is to help you guys any way that I can to realize that listing before one of your competitor does, because make no mistake about it, these people are out there. They need help. They're not going to be forthright with their challenges in retirement. So you have to do a little bit of fishing, so to speak. But the conversations will open up, and you will start to see a need for someone to list their house and buy a replacement home that's more suitable. And a good chunk of the time, the reverse mortgage for purchase will fit perfectly in that scenario to accommodate all their concerns and all their strategies they're looking to try to do. Definitely look at the videos for Remine and Title Pro 24/7. We have some cool strategies there that you guys could really start laser beam focusing on customers in your neighborhood or near your office or in your farm that have a highly likelihood of listing their home and buying a replacement. So, please leverage all this stuff we're giving you guys access to. It's helping. There's other realtors using it now, and it seems to be doing pretty good. Those newsletters that we send out on your behalf, it talks about, they're all geared to motivate somebody to list their home. That's the goal, because how could I ever get a referral for a loan if you guys can't get a listing? I have to start with you guys. So we are an open door policy. If you guys ever have any questions or need any help at all, please do not hesitate to reach out to us. We're an open door.
All right, great. I think I'm just about done here. So let me go ahead and share my screen. Okay, just making sure I got everyone. Oh, we got one more.
It looks like Sandra just came in.
Yep, I'm gonna have to put it in. Bear with me because I'm doing this all manually. Okay. All right. I think that's everyone. All right, let me go ahead and share my screen right now.
So does it put everybody on a wheel?
Yep.
Oh, that's
everyone
cool.
on a wheel. Do you see my screen?
Yeah.
All right.
Oh, that's so cool.
Yeah, all right. It's kind of cute. All right, we're gonna go ahead and spin it.
Looks like Don Simpson.
Don Simpson, congratulations. You are the winner of our
$20.
$20 Amazon gift card giveaway. All right, perfect. All right, everyone. Thank you so much. And then Don, I will, oh, congratulations. It's
Are you
Don's
kidding
birthday
me?
today.
Wow, that's awesome.
Right, that is pretty awesome. All right, everyone. Well, thank you guys again so much for attending. And yes, for everyone who's attended and then send us our email, we will be sending you that video series right about today, probably within an hour or two. So look out for that in your inbox, and we hope you enjoy it and then take advantage of all the complimentary resources that we offer to you upon completion.